So we have CoinShares here, Bitwise, also very interesting company. Bitwise is like the S&P 500 for crypto, world's first cryptocurrency index. And they start with this 2017. We know the hell is going on here. I'm sorry. It's always moving back to mute.
Well, at least you're not a cat. You don't have the cat Zoom filter.
Exactly. I'm sorry. I hope that it works now. Then we have
anyone knows that means.
We have HANetf with Hector McNeil here, which has also very interesting projects where he can tell us about number one, ETB on the Frankfurt Stock Exchange, more than 1 billion under management now. We have Shantanu Surpure, who is the co-host with me from Inventus Law, global tech law firm with a strong footprint in India. We have 21 shares from Switzerland, which has also very interesting products we want to discuss. And we have Preos from Frankfurt, which is a company whose shares are quoted on the Frankfurt Stock Exchange and which have decided to have a double listing, which also tokenized some of their shares, which are now, you can buy them as a token or as a share. And we are very happy to have you here, and that Crypto Valley Association is enabling this, this event. As you may know, Crypto Valley in Switzerland, our goal is really to provide a platform worldwide to share information about crypto and blockchain developments. And I'm leading the working group investors. We defend investors in the crypto space, which are growing every day, and we try really to do a clear and good analyzation and openly and discuss them honestly what happening in this space. So I'm very happy, and I would like to introduce Shantanu to move forward and to
yes, thank you very much, Martin, and thank you to all our wonderful panelists. When I thought about this panel, I thought about several things and how people are more interested in crypto. And one of the challenges around crypto is it's just this mystery thing for many people. And what demystifies it is when things become listed and regulated. And I think that was what drove me to get involved and interested in this panel, because I think the people on this panel are demystifying this and really playing a leading role and really a frontier role. I called it, I was joking with some friends, it's an all-star panel. But actually, it's a rock star panel. I mean, literally everybody here is on the forefront. You decided who's Eric Clapton and who's Bono. But I think we're very fortunate to have some really top people in this space. I was just counting up the assets under management. It must be over $3 or $4 billion in all this group here together in the US, the UK, Germany, Switzerland. So it's really very interesting. We've had a very exciting week this week around the crypto space. I'm sure all of you read that Tesla announced they're putting $1.5 billion of their balance sheet in Bitcoin. So that's just the start. I mean, there was Square before, but as more and more companies do this, there's going to be more and more interest in this space. Now that is clearly from the large corporations, and they have the wherewithal and bandwidth to deal with custody issues and compliance and all that. Your average individual doesn't necessarily have those issues. There's so many anecdotal stories of people who have bought Bitcoin and lost keys, and there are millions or billions of dollars of lost keys out there. And I think that is one thing that people are just terrified about, is that I've invested in this thing and I can't find it anymore. And so that I think will also help drive this space. The other thing I think that is interesting is the different types of products that are listed, depending one on the jurisdiction and the actual product. And so when we look at it, we talk about ETFs, ETPs, ETNs. These are some acronyms in this sort of word salad or alphabet soup here. But if I could just take a step back, all ETP is an exchange-traded product. ETFs are exchange-traded funds. All ETFs are ETPs, but not all ETPs are ETFs. And people use the term ETFs very loosely. I think particularly in the US, we use it very loosely. But not everything is an ETF. We've been talking about in the US a Bitcoin ETF for a while. I'm not convinced it's actually going to be a real ETF because you're investing in one product, unlike an actual fund. Now, the difference between a fund, mutual fund, and an ETF is that a mutual fund calculates their NAV generally once a day. An ETF differs in that it's like a share. It continually every minute the share price changes. The ETF price changes, and I think that's kind of the innovation here. But I think obviously these gentlemen are the experts. So I think we can start with. I'm just going to go, from who's on my screen really, and we'll go around it. And if Martin gave an introduction at a high level, if each person could talk about, maybe anything in their professional background that they would like to share relevant to this, and also their company and their product. So if I could go with Nils, you're in Germany. You're actually a little bit different. Preos Probability is actually quite different from some of the other groups because it's a real estate related token. So it's not actually a Bitcoin or Ethereum product per se in the same way directly with those. So please go ahead, Nils. And I'm delighted to say Nils Schoenaich. This is the first panel where I don't have the most complicated name. So congratulations, Nils.
Yeah, thank you very much. Thank you for having me. My name is just Nils. That's the easy way. I'm Director Treasury and Digital Assets at Publity. Publity is a German investor and asset manager for office real estate and the issuer and platform operator of the Preos token. And Preos is an 86% subsidiary and the portfolio holder of office real estate that we own with assets under management of around 1 billion euro. And what we did over the last 9 months is we created the world's first tokenization of a share of a listed company in the form of a digital twin. Why do we need a digital twin and not the real share? That's quite easy in Germany because somewhere in a cellar in a bank or at Clearstream, there's a piece of paper which you still need under German law. So that's why we had to build a digital twin. The issuance of the token based on a securities prospectus approved by BaFin took place in November 2020, as well as an international private placement. And in the first step, 25 million Preos shares have already been tokenized, and another 25 million more shares can be tokenized in the future. And we talk about a token on the Ethereum blockchain based on a modified ERC 1400 protocol. Classical digital asset. And the token gives the holder the essential, most of the essential rights of a share. So in addition to dividends or to a right to receive dividends, the holder is also given voting rights via a trustee. So the token conveys a tokenized trustee position to the token holder, which means the transfer of the trustee position and the claiming of the rights through this trustee position basically depends on the possession of the token. So when you own the token, you got the rights. And thus means that the token has, to speak securities-like functions in the sense of a bearer instrument. So another nice idea regarding this token is you just said we want to bring the token to a broad or to the whole society and not only to experts. That's why you can swap our token at any time into Preos shares. The shares are held in custody by a security trustee or depository. So Ksiss Bank is doing that for us. And you can claim 25 hours, 7 days the share. You can swap it, then you get the share on your bank account, and the token will be burned then.
Okay, superb. That's a very innovative structure and very unique that you guys are doing. And you said, I think it's 250 million euros. How much is the value of these tokens?
It depends on the share price. Right now, it's 250 million tokenized, but we have the approval by BaFin for 500 million euros. And we strongly believe that with the use of this future technology, we want to help the digitalization of the financial market, achieve a breakthrough in the long term. This will benefit startups and technology companies all over the world. And for sure, we want to see a more diversified investment base with different investors from all over the world in our share.
Okay, superb. Townsend from CoinShares.
Oh, yeah. Townsend Lansing, head of product at CoinShares. We are Europe's largest provider of listed products referencing digital assets. So the famed ETP, ETNs, with around $4 billion under management, give or take, the price of Bitcoin and ETH dependent. We also have a number of interests across the digital asset infrastructure, including a very extensive and large OTC brokerage desk for digital currencies, direct. We have a small active business run out of the United States. We have interest in indices, combining gold, for example, with a basket of cryptocurrencies. And we've launched in partnership with some others, a gold token as well. So we have quite a large and diverse interest across digital asset space, but our main focus, I think, is the passive business with listed products and then the OTC brokerage business. I personally am a trained lawyer for my sins, but have been
We're both alumni of the same school.
Yeah, we did.
There you go.
Yeah. Been listed products for about 15 years, started in structured products, and then was actually hired into ETPs by Hector and his partner, Nick. So I worked for them for quite a few years in the early days. Yeah, I also spent some time in a tokenization company as well.
Your listed products are which exchange? Was it only London?
We have two issuers. The largest and the incumbent is XBT, is the one that Martin mentioned, that was founded very early days, 2015, 16, that we bought in 2017. I think Laurent was at the company at the time. That is listed out of Sweden. And then we just recently launched a new issuer, which is a Jersey entity similar to the products that you might find in gold space, which is currently listed in Switzerland on SIX. We have products in Bitcoin, Ethereum, Litecoin, and Ripple out of Sweden, and a Bitcoin product listed on SIX now.
Okay, great. Laurent, please. Laurent Ksiss, from 21 Shares, Zurich.
Thanks, Shantanu. So my journey started, this Bitcoin journey started quite early on. Even though I'm not a pioneer, I started really looking at cryptocurrencies in 2013 when I told the market making business in the ETF world that I was leaving for this very new asset class. Everyone at that time laughed at me and saying, "You mad?" Quite frankly, I don't regret any of it. I mean, the last 7 years has been nothing but an amazing adventure. And when you look at what's happened, you know, there's been so many things that we had the doors closed, and now look how many new issuers are available today in this market. So it's, you know, it's quite an interesting and soothing environment to be in, when so many of the issuers today are coming in. When you know, Townsend just mentioned, I used to be an XBT provider in Sweden, and I spent quite a lot of time with the business to get these people interested, because originally what was going on is people had worries, and I'm sure you're going to ask a question about that, how to get involved in the crypto space. And there's nothing better than having a listed product on the market that literally democratize access to this underlying asset. And that's what we've been doing at 21 Shares. This is exactly our mandate. We are an issuer of crypto assets. We're very Swiss for that matter. We're focused predominantly on the so-called DACH region, Deutschland, Austria, and Switzerland, of course. And we're really focused on one thing, which is helping institutional investors. That's all we've been doing since we started this wonderful journey in 2018, when we launched the first crypto basket. It was quite a revolution. No one had ever done that before. First of all, because it was a basket of crypto assets. And secondly, it was the first proper ETP that was in the market throughout Europe, throughout the world. Obviously, XBT was available for the retail market, but we literally just wanted to focus on institutional, because many institutional had been coming to myself and also to the company. Both our founders have had so many demands. They wanted to have exposure to a basket of crypto assets. And that's what came out. Now, today, we have 12 products on the market, and all we've been doing is innovating in this space. So I'm delighted to have, so many people that are now joining this space and competing in this market, because that's what we wanted. We really wanted to see the acceptance of crypto into a listed product. And certainly 21Shares has done this. We've shown the market last year that we can list quite a lot of products. We've done a brand new product last week called Polkadot. We had to do this because our index provider removed an underlying asset and was replaced with this new crypto asset. And on the back of it, we decided to list a single asset. Just to give you an idea, Shantanu, it took us 5 weeks to list it on the market. So we were really pleased about this because it shows that now there is an acceptance. The market is responding positively, and they're accepting this new asset class with certainly new issuer. We consider ourselves a fintech company, but we're listing financial products. What we do also very well is we've got a white labeling solution. So we help also asset manager who have an index or maybe a strategy that they want to list, and they list it with us in an ETP. So today we have just close of $650 million in assets, and we've done this in just around 2 years. So I'll stop there and bring it back to you.
Okay, no, that's superb. And I think you hit on something I'd mentioned earlier that, well, there are 3 lawyers on this panel, but so I think for all of the lawyers on the panel, we like to see something that's regulated. And I think there's a lot of mystery around the crypto space. People still think it's something underhanded, and there's something sneaky about it. And I think that's a response all of us have received on a regular basis when we tell people who are not in this space we're involved in crypto. The response is sometimes that. And I think the more that this moves into the regulated environment, the more that this becomes mainstream, and the more it's just, I don't want to use the word legitimatize, but that's kind of what happens when there's just comfort and confidence that it's regulated now and there's a regulatory environment around that. And I think that's great. And congratulations on the Polkadot listing, which we saw last week. So, this is a very timely panel. Thank you. There are things happening every week on this panel. So that's great. We'll come back to some of the regulatory issues as well when we delve into this, because you mentioned 5 weeks it took to get listed. I don't know in the US we can ever do anything that quickly, and we'll talk to Matt about how long they've been trying with their Bitcoin ETF. Hector, please.
Yeah, so hi everybody. I'm Hector McNeil, co-CEO, co-founder of HANetf. It's actually my 4th ETF brand now that I've brought to market and grown products from scratch to billions of dollars of assets. So I think at last count, myself and my partner Nick issued over 530 ETFs and ETPs across 23 different listings globally. And actually, just for context, that equates to just over 5% of the world's total of number of ETFs and ETPs, not in assets under management, but in terms of number of products. We've always been at the forefront of new markets, doing new things, bringing new asset classes to market. For instance, we were part of the team that brought the first gold ETF to the market. And I see a lot of parallels in the gold development as in this market. Everybody takes gold ETFs and ETCs very much for granted in the world as a mainstream product. But there was a time long ago where, we had to jump through massive hoops with the FCA and various other regulators just to even get UCITS funds able to buy the bloody thing. So, it's now a multi-hundreds of billions of dollars of assets business now. So, and I think this is going to go exactly the same direction. But HAN's a little bit different for us. We're Europe's first white label ETF firm. So we've got both ETN, ETPs, and UCITS ETF issuance vehicles where we can issue products into multiple spaces. And we've had some nice pioneering products. We did a gold ETF with the Royal Mint, which I think is at the opposite end of scale to this market because the Royal Mint's Britain's oldest company. It's been around for 1100 years, set up by Alfred the Great in 886. Isaac Newton was the CEO there for 25 years, and he invented the first non-counterfeited coin that you could make. So huge history there to obviously the Bitcoin end of the market, which is totally the different end of the scale in terms of history. We're also quite well known for thematic ETFs. We have just under $700 million of assets in thematic ETFs. And in total, we started January 2020 at 50 million of assets. We ended 2020 at 1.1 billion, and we've added about another 550 million in January. So we're about 1.7 billion of assets with just over 2 years of operation. We have about 9 clients who sponsored funds on the platform, and our biggest ETF, whatever you want to call it, is Bitcoin. And I think even though we've come relatively late to the party vis-a-vis the panel, I think why that vehicle has exploded is because it's I believe the first sort of institutional class product that was available on a global stock exchange. And it's really to do with the fact that Germany opened its markets last March, and allowed products to be done. And I think the CoinShares efforts in Sweden was fantastic. Obviously the 21 in Switzerland were fantastic, but obviously they were constrained by the regulations at the time. But I think Germany opening up meant that you actually had a very sizable ETF market that was embracing these products. And actually the game changer for me was this is the first time that crypto could be central counterparty cleared anywhere on the planet. So institutional sized trades, instead of being a bilateral settlement arrangement, you were suddenly going up against Eurex as your counterparty. And I think that really institutionalized the product all in one go. And this was the first time any party had allowed that. So I think that's allowed us to garner 650 million of assets in about 5 months. And as you mentioned before, it's BTCE is pretty much in the top 3 most traded ETFs on the Deutsche Börse every day. And some days it's the more traded than the DAX, the Eurostoxx 50, gold, which is just incredible. I saw one day 2 weeks ago, it traded about $130 million on the Deutsche Börse, and it traded 36,000 times. There was 36,000 trades behind that, which suggests it's a huge amount of retail, same day trading activity. And when you add all the regional German exchanges, it's probably double that. And that really says to me that that's the power of ETPs, that they allow that market access that really is very difficult in other shapes or forms. So you get an institutional wrapper, which my mother can use equally well as Fidelity can use. So you get that sort of most democratized investment vehicle that's out there, whether it's an ETF, ETP, ETN, doesn't really matter. It's the ET part that's the crucial point. Right. You can buy one share for $20, and that's incredibly powerful. And as I said before, going back to the original argument, what happened in the gold market is going to happen here.
Yeah, no, you're absolutely right. I was researching for this panel, and we don't even have an ETF structure in the US yet for crypto, but GBTC Grayscale Bitcoin Trust is in the top 1% of volume flow already, and it's using this trust structure. So Hector, what countries do you have products in? You said UK, Germany?
Yeah, so we're currently in Germany, Italy, the UK, LSE, and Switzerland. For the BCE, it's only listed in Germany and Switzerland for obvious reasons. The Italian Stock Exchange doesn't allow it yet. The London Stock Exchange doesn't allow it yet. So those aspects. I mean, the product is passported for sale into those countries, but it's not available on the exchange in those markets.
Yeah, we'll get to the regulatory environment next, because I think that's crucial and critical in pushing this market forward. Certainly, I think the next guest is my fellow American, Matt Hougan, and I think we're looking at this from this side of the pond, thinking, wow, they have all these things going on there, and are we missing the boat here in the U.S.? We're a little bit behind the curve here, but people like you are obviously pushing this forward. So Matt, please describe what Bitwise is doing in this space.
Yeah, sure. People have been working on ETFs in the crypto space for 8 years in the US. So it has been a slow slog, but I do think we'll get there. Bitwise is a specialist crypto asset manager backed by some of the leading VCs in the world, folks like Khosla Ventures and General Catalyst. Today, we manage about $900 million in assets. It's growing very quickly. As you and Martin mentioned, we're best known for having the world's first and largest crypto index fund in the space, the Bitwise 10 crypto index fund, which holds the 10 largest crypto assets in a market cap weighted basis. A lot of people refer to it as the S&P 500 of crypto. We also have single standalone Bitcoin funds, single standalone Ethereum funds. We have a product that we co-developed with Laurent and 21 Shares in Switzerland that provides index-based exposure, which we're very proud of. Our real place in the ecosystem, which is a lot of what this panel is about making crypto available, not to the largest institutions in the world who can work directly with custodians, not to retail investors who can access it through their app, but to the financial advisors, professional investors, hedge funds that control about half of all the wealth in the world, and which crypto generally overlooks as if they're not there. It's sort of a donut hole of crypto coverage. So we spend most of our time developing very simple beta products and then educating people about why they matter and why they're important. So we've done things like, in January, I published the CFA Institute's first ever guide to crypto assets, which you can download from their website. That's what we do. My background's in the ETF space. I've known folks like Townsend, Hector, and Laurent for many years. I was the CEO of ETF.com and the CEO of Inside ETFs, the largest ETF conference in both US, Europe, and Asia, and ran that business with some colleagues for about 12 years before selling it in 2015 and moving over into the crypto space, in part, and Laurent may not know this, in part because of a conversation Laurent and I had at an ETF awards dinner holding a flute of champagne, where he told me that ETH was going to trade to 1,000 and I should read up about it. At the time, it was trading about $100. Today, it's obviously 1,800 or so.
1,800, yeah.
So we all need someone early in our crypto journey who tells us to pause for a minute and actually study this thing and take it seriously. And if you take just a few hours of serious reflection to get over the reflexive rejection that we see from so many in traditional finance, you begin to understand that this is phenomenally interesting, phenomenally exciting. There are a few people in my past that played that role, but Laurent is one of them. So thanks, Laurent.
Well, that's like Dustin Hoffman in The Graduate, where I think that the father-in-law told him to buy plastic, right?
Exactly.
If anyone remembers the movie, invest in plastic. That's the future. So Laurent's playing it. But I find it very interesting that, Hector, you mentioned that you had a huge institutional following, and Matt contrasted this by saying that there was this kind of in the middle where it was not necessarily institutions, but RIAs who were managing private wealth, and that was an interesting entree point for them. So some different strategies here that we can talk about in terms of who your market is and who the audience is for this, and what their differentiators are in terms of these different products. Everybody here has different products. So I think there's I guess two or three more questions we can kind of go through. One is the regulatory environment, which I think that's very interesting. And in terms of the structure of your product also, I think is also something that I would like to understand a little more. We talked about ETPs, ETNs, ETFs, and we have trust structures in the US, which Matt is using because we don't yet have an ETF structure. And Matt, I don't know if it's actually ETF is the right word. We're using that word very liberally here. Is it really an ETP?
It's not an E anything because it doesn't trade on an exchange. It trades on an over-the-counter market, a bulletin board system. So I hate to pollute the alphabet soup already stewing here, but it's an over-the-counter traded Delaware trust. The difference between that and a traditional ETP is that these OTC trusts, of which GBTC is the best known, BITW is the largest index fund, is that they can and have and will trade at large and volatile premiums and potentially discounts to the net asset value. And we're all longing for the day when we have an ETF. I'm working on it day and night in the US. Had more than a dozen meetings with the SEC in the past year about it. I think we'll get there. Until we do, we have these imperfect vehicles, but they're still providing people access, right? GBTC was trading at a premium in 2015, and people talked about like, oh, you can't go near it. I think the people who bought at that point did just fine. So as long as investors understand the risks and understand how the structure works, then they can make the appropriate decisions. So that's and
would people using a trust structure be able to convert to an ETF structure? Is that the plan or the idea?
There are people who are focused on that. We're not focused on that because in the US, the SEC is only, within shooting range of approving a Bitcoin ETP. Like, we don't know if they will approve a Bitcoin ETP. They're a long way from approving an index ETP or an ETP
Right.
on assets. So we haven't focused on that, but I imagine that Grayscale has some very high paid lawyers who have done extensive work on that. And for what it's worth, Grayscale, great company, full respect to them. But they're probably looking into that. I still think it'll be a native ETF that wins. That's my view.
Someone that starts an ETF from scratch.
What starts an ETF from scratch. And the last thing I'll say, and then I'll shut up, people in crypto get very upset that it's taken 8 years for SEC to approve a Bitcoin ETF. But as the ETF people on this panel knows, it has taken them many years to approve many different kinds of ETFs. Non-transparent active ETFs took 11 years. Bond ETFs took multiple years. Gold ETFs, I think the World Gold Council spent about $14 million on lawyers before they got a gold ETF approved. Like the mother's milk of simple products, gold ETFs took many years and years of meetings with the SEC. So it's not atypical for the SEC to take a while. In fact, I think they were appropriate in rejecting ETFs in 2013. I don't think the market was prepared for that. And it doesn't mean that we won't eventually get there. I think we will. I could be wrong. I think we will. But that's important context that many people that are crypto native don't understand.
Yeah, there's certainly the regulatory bodies are going to take their time and study these thoroughly and make sure that it's appropriate for investors. So if we go back to Nils, you're in Germany, you don't have an ETF per se or an ETP, but it's this token. So you kind of describe more about the regulatory environment around that. And then also, what was your strategy in creating this? And what's the differentiator? It's so unique that is there anybody even competing with you on this space?
First of all, regarding the regulatory part, what we have seen in this project, so this was what we did is completely new, also for the regulatory department like BaFin, and we worked together with the BaFin on that, and they are really deep into detail, and they have really professionals sitting there who are absolutely up to date. And they were a really good challenge partner. And it took us, like, I think the whole process, the whole prospectus process took us like eight to 9 months. And yeah, I think it took only 9 months because we talk about plain vanilla underlying, because what we wanted to do is we just want to create a digital twin of a share. And the BaFin knows perfectly what a share is because this is their daily business. So I think that was the key for succeeding on this project. And what you just mentioned, yeah, there are I think there are a lot of other ideas from companies who want to tokenize their shares or other stuff. And I think there are like two major factors are very important regarding this, because we talk about tokenization in 2017, 2018, but we've never seen the demand side. So there was always a supply side, but not a huge demand side. And now I think in this year 2021, we see two main factors. First of all, the regulatory framework, so which we right now get in Germany with the electronic securities law, which includes debts and also funds, not equity right now, but maybe it will come. So Liechtenstein and Swiss are far away in comparison to Germany. But what I want to say is we need a stable framework for institutional investors and for significant investment amounts. And this is what's happening right now in Germany. And the second very important point is that what we see is that there are secondary markets with real MTFs, so multilateral exchanges. So we see that in Europe, 4 players, 1 from UK, 1 from Switzerland, and 2 from Germany, are almost ready to start their business between June and October. And that means when we have real market makers, and this will bring a lot of real liquidity, and people can trade token versus token and token versus crypto, and crypto versus token versus fiat. And this will be a huge game changer because of the liquidity, and both will happen in 2021. And that's why I'm totally bullish for this and next year regarding tokenizing, almost everything you can imagine.
But the idea behind tokenizing was what? Because you need a physical share certificate in Germany, and that's so therefore you needed to create a digital twin. I'm just curious about what was the transition, or did you want to tokenize the underlying real estate assets? Was that the driver?
Yeah, we were thinking about, do we want to tokenize a real estate asset first, or do we want to tokenize the share? And the share was, on the one hand, the bigger story with the bigger volume. And on the other hand, it was a plain vanilla product that everyone understands. When I will bring a token on an asset that we own that's worth 400 million, and how should a retail guy should know if the token is worth €3 or €4? So there's not the ecosystem right now for a fair valuation for these kind of investors. And to bring this idea of tokenization to the people, the idea of a share, of a digital share, of a tokenized share, which you can, if you are afraid to have a token in the end swap again against the share, was I think the key to bring this topic into mainstream. And this is what we have seen. So Frankfurter Allgemeine Zeitung, Handelsblatt, all the huge newspapers were reporting and talking about this digital share on the blockchain, because everyone understood the underlying and what we do there. And this was the opener to tell our story, why we believe in tokenization. So and we are focusing not only on institutionals on that in this time. We also look at the retail, because the retail has at least no real investment opportunities right now. They can invest in shares, in ETFs or funds, maybe in gold. Some of them can invest in crypto. And the other thing, what they can do is they can buy a flat or house, with a huge cluster risk, or even worse, they live in it. So with this new technology, when everything is flexible, tradable, and divisible, people can invest in parts of Picassos, in specific rights,
Correct,
in future cash flows, in specific assets, and everything, and almost without intermediaries. And this is the story we could tell the people because they understood the initial underlying.
Okay, no, that makes a lot of sense, and I don't think we have anything that's listed. I've seen in other jurisdictions, maybe anyway, that's similar, a listed token in the same way. Certainly, the US, I've not heard of this, but
there is some tokenized real estate, and there's also some tokenized paintings, but it's not the equity. It's like a
physical asset
that is tokenized then. But this is real equity, and with a share of a listed company, no one did that before.
Fantastic.
I think that, I mean, this is if I may jump in here for one question. I think it's very interesting to see that we have basically like opposite or opposition concepts here. On the one hand side, we have crypto assets or coins, tokens, without an underlying, which are brought into traditional market through these ETPs. And on the other hand, with Preos, we have traditional underlyings which are tokenized. So it's basically going just the other direction, and it's quite interesting what we saw now the last few months. That basically, I mean, I remember this discussion. It's already taking years now to tokenize real assets and to bring them on the blockchain. And until now, there was not a huge market success. Until now, I think what we saw now the last few months, it was more like that, Bitcoin without an underlying, Ether with a utility, but also without an underlying, other altcoins, etc., had a huge increase in their value, and they were brought into these traditional instruments, which we just have discussed before. What's your, maybe from each of you, what is your opinion on this topic? I mean, what will happen? Will there be further coins with underlyings or not? Is it necessary or not? Maybe it's interesting also to see this from Matt, Hector, Laurent on Townsend. What do you think about this?
In terms of like Neil's business of tokenization or our business of wrapping digital currencies into ETPs? I think in both it'll expand. I spent about half a year, maybe a bit more, at a company called Token Market here in the UK, where we were looking to tokenize securities. I think the primary challenge you have there is distribution. So the technology exists. I mean, you've got companies like what Niels is doing. You have Securitize in the US providing tokenization capabilities. The challenge is I think for that business, it's fantastic. And I agree, fractionalization of assets will be amazing. Right now, the challenge is kind of who distributes that, because the traditional investment banks that underwrite those types of offerings aren't really involved in distributing tokens or tokenized assets yet. So once that marries with the technology, which is really moving along, I think you will see an explosion. I think we're still, 2019 was meant to be the year of the token. I think it's probably been postponed, but I do think it will eventually catch on. And just as you're seeing more institutional adoption of the underlying digital currencies, I think you'll see institutions starting to look to distribute tokenized assets to their clients.
I mean, I think the other interesting regulatory angle is this tokens used to be a very niche sort of thing. And there was an entire issue around whether the token was a security. And that whole debate had gone on for a while. And now if you have them listed, that may take away some of those issues, because if it's listed, it's registered. And then even if it's security, it doesn't matter because it's registered as a security. So that might also help.
That debate wasn't as large in Europe, mainly because we don't have.
Definitely the US.
Yeah, the US with the Howey decision and the test. I mean, Europe got ahead of that, I think, started with Switzerland very clearly, and now with the German proposals and eventually MiCA, the UK being some of an outlier. I mean, they've gone quite clearly in creating a taxonomy that doesn't rely on kind of 4 principal points decided in a court case that was more or less looking at whiskey and the like.
1940s.
But you're right. I mean, fundamentally, that transparency, I think that Niels was talking about, which you'll get with MiCA in particular, that comprehensive, transparent regime where everyone knows, like, this is going to be under this regime, this will be under this set of rules. We'll do a lot in Europe to move both tokenization and then the ETPs that we launch forward.
Yeah, I would just add, I think the tokenization of other securities is a really interesting, exciting, difficult market to think about. From a big picture perspective, it seems inevitable it will happen, right? But that's true of many technological advances, like the current settlement regimes and settlement processes are just insane. It's hard to imagine that they'll be the status quo in 30 years and it won't all move on tokenized securities over blockchain. But how you get from there to that inevitability is always a challenge. And the 2 primary ways that it can happen quickly are either regulatory things, which I think Townsend is pointing towards, or difficult edge markets. So in the US, an example of a difficult edge market, there's a class of private funds that are only available to a certain class of accredited investors. And it's a very inefficient scheme for qualifying investors as accredited. Every fund company does it individually with their own lawyers. And a tokenized solution in a market like that would be beautiful because your accreditation could travel along with your tokenized purchase. And that would solve like a 10x pain point. And I think those niche cases, at least in the US, I'm not as familiar with the European market, is where you'll start to see this flip occur of tokenized securities, is in niche cases where the current system is not just annoying and occasionally has flare-ups like the general T+2 settlement space, but is acutely painful and can be solved very efficiently in this new structure. So I think it's inevitable, but I think it'll, at least in the US, it'll take these sort of niche, difficult pathways before it goes deeply mainstream.
I agree. I mean, in my 6 months at Token Market doing this, the only interesting use case that I really found was actually an edge case between Europe and the US. Not to geek out too much, but when US companies try to issue shares into Europe under Regulation S, which is an exemption, they're essentially category 3, which means they have to be demarcated and have an accreditation that follows them. Because if they flow back into the United States, they violate the 33 Act. And if you can create a separate blockchain that tracks that, you can actually open up the European markets to a lot of domestic US companies. They can offer their securities in quasi-public offerings into yours, generally less onerous and probably easier than being a 33 Act registered company, filing the 34 Act. And they can also eliminate that risk that those securities flow back in the US and the SEC calls them up and says, by the way, you violated the 33 Act. So I agree with Matt there. There are in traditional securities markets some really interesting use cases for tokenization that I think, again, once the big institutions start to think about them, they eventually will help push forward that industry.
I love that. That's where I think it's going to take hold before it takes hold in the broader public market.
Without a doubt, yeah, definitely. I agree. I mean,
Okay, fantastic. Laurent and Hector, any thoughts on tokenization?
Well, if I may just jump in, I think what Nils is doing is admiring. I mean, they've been able to speak with the regulators in a very environment that has probably been very against it to get some of these regulators, particularly here BaFin. So you got to admire what they've done, getting BaFin on board to be able to tokenize some of these real assets. And I think this is uncharted territories. We're just in the beginning. If Nils and his firm can do this, and of course, what we're talking about here is probably a bit of regulatory arbitrage. They've been able to speak with the regulators here. BaFin is probably more open than any other European regulators for that. And again, I agree. You guys in the US have a much easier way. You deal with one regulators, with one counterparty, with one language. Here we're talking, multi-countries, multi-languages, multi-cultures. Even the law doesn't even abide throughout in Europe. People have they've got different rules. So tokenizing assets is potentially the next big thing. And we've even looked at this ourselves. I mean, one of the things you could even be doing is tokenizing equities, even ETFs. Because Townsend, I think, mentioned it as well, and Matt confirmed it, is the fractionalization of these assets will make life a lot more easier. Then, of course, what you have is settlements on the back of it. But the fact that they've been able to do this today with a regulator in Europe is very admirable.
Yeah, definitely. So Hector, just any thoughts? And also regulatorily, given that now Brexit is real, and I guess congratulations. I don't know what to say. You're on your own now.
I think to be fair, we're probably only 10% in, to be honest, and obviously the world we're in hasn't even been talked about yet. So I think a long way to go yet with Brexit. I mean, to be honest, I defer to most of the people on the panel. Really, I mean, my job, as I see it, in the markets, is to give efficient market access with products we produce. So I'm less inclined to try and guess what's going to happen in the future. The only thing I do, I spent sort of 5, 6, 7 years of my career working for stock exchanges and specialize a little bit in clearing, actually, from years ago. And this stuff's glacial, and it bores me silly, to be honest. So I think it's something that will be driven, even though we like to think we're decentralizing, but I think it will be driven from the center, because ultimately those guys will control both the regulations and the scale and the finance, the funding to do it. And I've just, I continually try and tell my guys, look, we're not out to educate anybody. We're not out to change the world. BlackRock will do all those things for us. We just need to come in with better products at the margins and take what we can when it's there. So I don't really have a huge opinion on it, but when things get to critical, like things like Bitcoin and Ether, etc., will be there, and we'll provide a great way for people to access it. It's like when we used to do the gold product back in the day, and people used to always ask me which way the gold price is going. Is it going up and down? I said, I don't care. It's going to go up and down. I'm going to track it. You've got to make that decision.
Yeah, no, that's absolutely right. I do have a few more, I have questions, the right word, but what are some of the challenges to increasing this market? I mean, some of the things I thought about were, perception. that we talked about earlier, that this entire crypto industry is sort of suffers from a perception issue, and there's an education aspect of that. There's a security issue, and I don't mean is it a security, but are these underlying crypto assets, what's the security around them? I mean, certainly we talked about how if any individual buys crypto on their own exchange, you know, they're potentially worried about self-custody. And so how do you all handle the custody angle? And the other thing I think that you know makes a retail investor happy is that, okay, the keys are not my problem anymore. It's the institution's problem. And if they were ever, and there's cold storage, there are vaults underneath some salt mines in Switzerland that I'm sure Martin's familiar with, holding these keys. And there's also insurance to back this up, even if something were to happen. And so I think all of that together is for me at least, a very compelling case as to people say, why would you pay a premium for any of these things? It's like, on your own, can you do any of those things? Can you get insurance? Can you get this high level of custody? And can you actively trade it? And so I think those, for me, are the reasons why this listing makes a lot of sense, and it just brings it to sort of a much wider audience. But you know, all of you here are dealing with this issue, so maybe Nils to a lesser extent because it's a token, but maybe you could talk about some of these issues of perception, security, insurance, custody, all these things around the underlying assets, and how does that work?
Yeah, I mean, I think that's exactly right. To be honest, I think you know, there are certain standards which, if you're going to provide a mass access product, that you need to have, and you know, that's as you rightly pointed to, it's institutionalized custody, it's insurance around the assets, and it's things like you know, having a trustee as part of the process, right? So you've got a trustee that wraps the product and acts as a fiduciary as part of that process. But just simple things. I mean, you know, Townsend will know very well, you know, the gold structure was a great one because, you know, you took a physical asset, you allocated it in the name of the vehicle. So therefore the vehicle, you know, had the assets, and then you issued the ETPs off the back of it, you know, and that's exactly the structure you use under BTC here. You get it, it goes into cold storage, and then the ETFs the ETPs get issued. You know, once they're held there in the custody, they're insured. Now, interestingly, one thing I've been really amazed about with the insurance in the crypto market is the custodians are a lot happier to talk about insurance than they are in the gold market. I mean, Townsend will tell you, if you try and get the gold custodians to talk about insurance, they won't talk about it. And the reality is, the reason they won't is because actually it's a calculation based on how much they think somebody can steal. So it's not how much is in the vault, it's actually how much they think they can get a truck to the back door, get it out and put it in the back of a truck and take it away. And that's what they insure. And I think it's pretty typical. And I think that's the typical structure for the crypto market as well. That, you know, it's an assessment in terms of, you know what people can get access to, and then that's the risk that you're actually insuring on the back of it. But I mean, you know, literally, we probably give out the insurance certificate on BTCE probably 3 or 4 times a week, you know, for people asking for it, because that's part of their due diligence now, really. And that to me is quite nice and quite transparent from a product. But I think all of that is very institutional class, and I think it gives a lot of surety and you know, takes away a lot of the friction. You say you don't worry about having the keys, you know, because ultimately all you're worried about is your passport to your Comdirect account or your Hargreaves Lansdowne account, because all of a sudden you can access the product in that means.
Yeah, no, I think as either as a retail person or as an institution, it's kind of a nightmare to hold all these things. It's completely
exactly.
But you're right. As you scale up an institution, it gives them a lot of peace of mind, and frankly reduces their liability, conducting the due diligence and having all these underlying security and insurance. So, Townsend, you're going to say something.
Hector's right. I think there's 2 aspects, obviously, to expanding the market. One is I'm sure Matt's kind of much more involved in this than I am, is convincing people about the investment case for the underlying coins, right? And that's really getting out there, talking about, you know, why should you buy Bitcoin? But, you know, from a product perspective, what we really focus on, I think, you know, obviously what Hector and Laurent have done as well, and Matt, was what we're doing is we're bringing an asset that is somewhat alternative, at least the access rails for that asset are alternative, and we're putting it into an infrastructure that institutions, by institutions I mean anybody above retail and beyond, all the way up the pyramid to, you know, from family office to pension funds, are accustomed to. So it's not a question, for example, when a family office or a private banker goes to his compliance and says, I want to buy Bitcoin, I want to sign up to Coinbase. It's, I want to buy Bitcoin, I'm going to use the SIX stock exchange. You're going to get a security. It's going to settle into your account. They answer all the same questions that any other security addresses or any other ETP we encountered. So it's making that ease of access to fit within the infrastructure that they're accustomed to. It's wrapping it in that really expands the adoption, because, if you imagine a large, even a smallish institution trying to convince, compliance and risk to open an account with some, with a pure crypto provider, not that there's anything wrong with it, but it just doesn't compute for them in a lot of ways. And we saw the same thing with gold, for example. When Hector launched the first gold and I joined shortly thereafter, a lot of investors were super excited because before, trying to convince their compliance departments that they could actually buy physical gold and hold it through this vault directly and how it would be traded, that was a huge hassle, right? But when we wrap that into an infrastructure and access rails where it was, well, actually, we're just buying a listed security and it settles and it embeds all the protections that you're accustomed to, it made that decision much, much easier.
I think that all makes sense. The only kind of counter to that is that the crypto, in a way, was kind of set up to be an alternative away from kind of the mainstream, right? And so in a way, it's like we're converging now.
But the people we talk to are institutionalists. Oh, sorry, Hector, go ahead.
I'll say hippies end up having.
Yeah,
good point. Good point.
There are a set of investors, I think, and as there were in the gold space, I know I analogize it a lot because there are a lot of securities who want exposure in a different way. And when they come to us, we say, look, understand, but as Matt mentioned before, half the world's wealth, if not more, is still tied up with people who are institutionalists, who aren't buying into the idea of a completely decentralized economy around, without any controls or layers. And they do understand the case behind some of what's going on here, but they're not necessarily fanatically devoted to that. Mm. And those investors who control a tremendous amount of money want traditional rails that are centralized, that they understand how it works, and that fit within their pre-existing compliance and risk management structure.
I mean, this is the question I would like to ask you. I think you should, it's an important topic which was discussed a lot the last few months. By the way, also for our listeners, I would like to invite you also, if you have some question, we have a Q&A section. Please feel free to ask some question. We try to select a few and to ask them to our panelists. But I would like to know, you selling these ETPs, do you know how many of your investors are institutions, and how much are retails invested? Hector, you mentioned before that you have almost 50,000 trades one day. This doesn't seem that they're huge tickets, but maybe I'm completely wrong. Do you track this? Do you have some information which is interesting for us on this topic?
Yeah, I think what's really interesting about generally on the ETF or ETP adoption is that's just really a sign that the asset class is becoming mainstream, right? That's just the fact that somebody, the asset allocators who are building the portfolios, like the uncorrelated returns, or they like the effect that the asset class is putting into the portfolio. And actually, Townsend is exactly right. Having an equitized product makes that dead simple for them, right? Under the current constraints or whatever the story is. So, and the great beauty of an ETF, I always say, my mother in Middlesbrough can buy one share and put it in her ISA all the way through to, the biggest institutions in the world can buy it, including sovereign wealth funds. You can do it anonymously as well because everybody buys it in the secondary market, right? Rather than doing it face to face, filling a form in and sending a check off. But typically the split, I would say, Martin, is probably in this product is probably far higher retail than probably normal ETFs. So maybe you might be talking 40 to 45% maybe retail. And then I think you've got like the institutionalization of the asset class now, with probably family offices coming first, with wealth managers and private bankers following them after. And then the big institutions are working up to now, as we saw with the Tesla news and various other things. I mean, I'm actively talking to, 3 or 4 of the biggest hedge funds in the London market now about, how it works and how they can understand it, what the story is. A lot of these guys have been trading grayscale and the futures, and they hate it because they're having to pay carry costs and premiums that, are just unjustifiable. And I think actually if people in the US realized how close the European, the open-ended European ETPs track the NAV off or the fair value of the underlying crypto market, I think those assets would leave that market instantly, because the efficiency of the products over here is just infinitely better than over there. And I think that's the power of it. But I would say, going back to your point, I think the retail's got on the bandwagon of this far more than the normal ETF in the ETF market, I would say.
Yeah, I would agree with that. I mean, Laurent can say XBT, first product to market, a tremendously strong retail holding. I think, in many ways, I joined CoinShares about over a year ago. I joined with another colleague who was previous head of sales at WisdomTree here in Europe. I mean, we joined to push to increase the institutional adoption. That was our primary focus. That's still developing. Oh, there's an echo, sorry. But it's taking time. And so I think you'll see retail will continue to push this. You'll see smaller trades, but you'll also see a lot of institutions beginning to not only to show real meaningful interest, because they're being pushed by their clients to show interest.
Yeah, I don't think today you can the answer to your customers if they ask you about crypto, especially if you're an advisor, financial advisor, is to say, I don't know. I mean, that's just not acceptable anymore. And I think to Matt's point, that's probably the audience he's targeting. They're going to their private wealth manager and they're saying, tell me about crypto, and you have to have a product to offer them. And maybe Europe has more products, but in the US it's coming. So any other thoughts about actually the custody market? Matt is really interested in insurance, the custody. I know a lot of because Hector made a point about another, I won't say the name just being the lawyer, but another well-known trust product in the US about the premiums, right? And how expensive they are. But I think the counter argument is the premium is there or the management fee is there is because the quality of the insurance, the quality of the custody. And so I think that's the other argument is that, there's a management fee, sure, but look what we're bringing you and you get what you pay for. What do you think about that?
100%. And ease of act. I mean, that's entirely true. We run into clients all the time who have lost significant amounts of money because they were keeping it on an app and their phone got SIM hacked and the money goes and that's it. Poof, gone, bye. So that has real value. Also ease of access, right? I'm a fairly sophisticated crypto investor. I'm the CIO of a $900 million crypto pioneer. And I've bought GBTC. Why have I bought GBTC? Not because I don't know how to directly buy crypto, not because I don't have contacts with custodians and market making desks, but because of ease of access and the ability to buy it through a brokerage account. The other thing I'd say on custody and tax and all those things, which I think the rest of the people would agree with, is you have to understand where most investors are coming from. Most investors are anchored on the ghost of crypto past. Most investors, when you say crypto, are still thinking Mt. Gox, Quadriga, right. Silk Road, criminal.
That's 2014.
100%. And so when people have an anchor that's so far to the left of reality, it's not just good enough to get them 51% across the line. You have to get them to 90%. You have to anchor them so far on the other side of normalcy that it enables to counterbalance their anchoring point. That's the reason why I think all the people on this think very deeply about who they partner with. We don't partner with any custodian, not because the smaller custodians aren't good at what they do. I think they're good at what they do. We partner with Fidelity and with Coinbase for our custody because when I go to a financial advisor and say, I'm custodying my Bitcoin at Fidelity, they say, great. And if I say I'm custodying my Bitcoin with a smaller custodian that they're not aware of, they're not as easily persuaded, right? Hector sends out those insurance certificates. No one comes to me for an equity ETF and asks, do you custody at BBH or BNY? No one cares, but they do care in crypto. So it's not just good enough to get people to 50%. You have to anchor them to 90%. And that means gold-plated partners down the mix. Again, this is why you see crypto products that are relatively expensive compared to other products, because we all have to partner with the single best providers, and they can charge premium prices because trust is so highly valued. And it's so highly valued because people are anchored so far from the reality of the current market that you have to overwhelm them with quality. So that's what we do.
Just one point to add. When I talked about premium, I wasn't talking about the fees. I was
Yeah. No,
premium that is 20%. It's not 2%. It's 20%, right? On these.
But that's a function of the market. I guess we were talking about, you know.
Well, it's only a function of the US products. It's not a function of you know.
Right.
It's not a function of the market. It's a function of SEC's
Yeah.
to allow for an open-ended product. I mean, I don't blame Grayscale for that. It's not their fault.
Yeah. Why
The fact that you have regulatory intervention / rent seeking that eventually forces investors to have bad outcomes. And so it's not the issuer's fault. I mean, obviously, if there were an open-ended product that was available and they could issue it and list it, they would. I think it's just the reality that the SEC, obviously, not with any bad intention, isn't willing to allow that, which then, of course, managers like Matt and obviously others came up with really good arbitrages around that within the existing rules, which ultimately necessitate a premium, because you have a 6-month, 12-month lockup. There's a lot of demand, and if demand exceeds supply and supply can't be open-ended, then you're going to end up with a premium. That's a classic problem of closed-ended products.
What about you, Laurent, in terms of the Swiss market and custody and insurance? Because I've been, reading about there's a famous provider that actually literally has, uses salt mines in the mountains of Switzerland to custody crypto, and so that's kind of a fascinating case.
Oh, well, we take security, very seriously. I mean, one of the things, and I totally agree with what Matt says. We look at our custodian and we scrutinize them. I mean, this is one of the things you have to go, because there's not that many around. They're all brand new. A lot of people don't know who they are. I mean, Matt mentioned Fidelity. Yes, everyone knows that, but they're very new in the crypto space. He's mentioned Coinbase. Again, everyone knows them in some way, form, but not many people know their custody division. And this is something that you need to spend a lot of time on. Only a year ago, there weren't even that many custodians, let alone institutions, institutional grade custodian. And this is one of the things that to lean on you. And that's why I totally agree with Matt. I mean, yes, you can have insurance certificate that Hector sends out to everyone. But one of the things is you need to be close to your clients. You need to have, that exposure. One of the things we do, and we pride ourselves, is that, yes, we're in Switzerland, so we know a lot of our private wealth. We know a lot of our family offices. They come to us, they want to meet us, they want to see how that process works. Again, we don't have huge amounts of volume, as Hector mentioned, with our product, but a lot of people trade OTC with us, and we know who they are. And that's a lot of, trust that goes into that. And this is very much a Swiss aspect that we've covered, and we're very proud of it. One of the things you've discussed as well is the allocation of retail to institution. We have probably, and we're very proud of this, we have probably over 90% of our asset that is quality institutional asset. So you can be sure that these clients will come to us and scrutinize us, who our stakeholders are, who are our custodian, who are administrators, who do we deal with, can we speak to them, how does that process work? And we really go through a huge due diligence like no other people will, because that's how the Swiss market works. And these people are willing to allocate a large amount of money. They're not willing to do it on exchange. They will do it OTC, and they'll make sure that they've met with us first. And we've sat down on many meetings, and we've explained to them exactly what we're doing and how we're doing it, and with which partners we're doing it. Now, you've mentioned some of these vaults. Yes, I'm aware. I've actually seen one. There's one with Xapo in the past. People probably don't know or remember who they were, but they've been taken over by Coinbase. I mean, they were the first institutional grade custody. You needed to know who these people were, let alone just knowing that their existence. You needed to scrutinize also the management, because you didn't know who they were to start off with. And we've done this exercise and we show this to our clients. So one of the things is we take safety very seriously because of our institutional broad access, and also because our institutional demand it. And they demand it because, yes, like Matt said, everyone knows who Round Bovary and Northern Trust and State Street banks are, but they don't know who the custodian people. We use many custodian because we need to diversify and we need to challenge them that they are our best partners. So all of this is something that we keep very transparent and we show our institutional clients for. And we've done this, first of all, in Switzerland. We're now reaching to European countries where we've never really had that question. Most of them ask, of course, for an insurance certificate, and we're more than happy to give it to them because we have that institutional base exposure from the start. So people have already seen that it works with us, and we can proudly say that because we have that institutional base assets, you know, people tend to lean on you much easier and scrutinize you less. So we've been very blessed by the fact that, yes, we are in a country where people can buy crypto through their bank, but no, they want to go with 21 Shares and buy the product from an institutional grade product because they trust exactly that process that we go through. And we highlight exactly these custodian and these entities that we deal with because most people will have never heard of them. And this has worked also in the ETF space some 10, 15 years ago when the market makers, when you mentioned Flow Traders and Jane Street, no one ever knew who they were. Look at them today. They are in the forefront of the crypto space, making markets for all of us. And this is where we actually highlight this to our client, and we take this very seriously.
I think that makes sense, and that's part of the benefit of the listed products. That was the whole thesis behind this webinar, was listed products and why we need them and why customers need them. And this summed it up very nicely in terms of custody and insurance and all this. Maybe, Martin, we only have 15 minutes left. We could go to the questions.
Actually, I would like to ask Nikki if we have some question from our audience.
Yeah, it's in the chat. If you want, should I go through?
Yeah, no, here I see some. Yeah, absolutely.
Yeah, so there's one that there's like four, but I think we can combine them. We'll get to three of them now. So one is around the tokenization, and this is specifically to Nils. So tokenization is basically this digital representation of something, and we understand the value of tokenization as it relates to something like art or real estate or watches. But how do you convince a large institution that there's a benefit to tokenization of a traditional asset like an equity or a bond? So that, to Nils, please. I think this is the most relevant for him.
So first of all, it's especially relevant for us to tokenize these illiquid assets. But when you want to search for an advantage, why to do that with traditional assets such as equities and bonds? I can just try to give you two small examples. The first are, for example, transaction costs. So when you try to bring a share from the USA to Germany into a depot of into a bank account of a German customer, there's a lot of work to do that we don't even see. So they work with ADRs and all this stuff, and this makes it very, very easy, smooth, and you have lower transaction costs. That's the first thing. But the second thing, and this is something that we might not see in Europe because we live in a quite normal world, our target audience, and we've seen who is really interested in these topics. We were contacted by people from Asia. You can see that in our news. We were contacted from people from Singapore, from Middle East, so from countries where people or also institutionals, family offices say, if it's when it's not my private key, it's not my asset. And for them, it's very interesting to have an asset on their ledger key and not on a bank account that can be frozen by the state. Your ledger can't be frozen by the state, and this is a point for them, which makes it interesting to also put traditional assets into this tokenization program.
Okay, superb. Another question is for Townsend. So Townsend, specifically for Townsend, what products are you most most excited about as head of
it's
product?
difficult with my competitors on the line, but you know, I mean, I'll answer a product that we're not looking at that I personally think is going to come, and maybe it'll tie into something probably Matt will talk about, which is I think it will be very exciting in Europe after MiCA gets introduced to see when someone wraps an index of digital currencies into a proper UCITS fund. So we talked earlier about the ETF, ETP. The main difference between an ETF is that it's a fund under the regulated fund regime. In Europe, that's UCITS. In the United States, it's the 40 Act. Now, right now in Europe, you can't do the digital currency ETF, a fund, for a wide variety of reasons, mainly because digital currencies aren't eligible assets. You could theoretically do a diversified index of digital currencies in a UCITS fund, but you need two things. One, you need a proper financial institution who will write you a swap, because the only way you can do the exposure is the actual swap. And this is how UCITS funds do commodity products. And the second, of course, is a UCITS regulator willing to approve that. I do believe, I'll throw this out here, that we will get there here in Europe with a proper ETF. So I mean a regulated fund in the UCITS structure offering digital currency access before the US will get a single Bitcoin ETP.
Hey, Townsend, do you think Germany would allow that now? I sort of think they would.
You know, Hector, I don't want to, I mean,
Yeah.
I don't know the answer to that because I have not, I mean, I think it's something that will, the biggest challenge I think you have is the first one is who's going to write the swap, because you need obviously a proper financial institution, and none of the banks right now are dealing that. Maybe some in Switzerland, I think of one or two that come out, but if you can solve that, and that I think will come around eventually in Europe, I think you will find a regulator who's favorable to that. It'll be an interesting thing. I'm willing to boldly say that in Europe we will get there with that structure. So a minimum of 5 diversified in a UCITS fund before you'll see a grantor trust that's listed on NYSE or NASDAQ doing Bitcoin exposure in the US.
That could be a good strategy for the UK, right? To establish an ETF.
Yeah.
You know, I mean, they're scratching their heads trying to think about how do they compete with UCITS and ETFs. You know, that would be the way to go. Create a regime where you could do crypto ETFs out of the UK.
Yeah,
definitely.
I think we should put a fancy dinner bet on that, Townsend.
Sorry?
I think we should put a fancy dinner bet on that.
Let's do it. Let's do it.
For sure. Hey, Matt,
I
what
think
other question?
we have another question for Matt. Anyway, I see here. No, what for Bitwise? What's the main hurdle for Bitwise to have the SEC approval?
Yeah, it's a great question. We did something like a dozen meetings with the SEC over the past year. They used to have a huge number of concerns: custody, audit, risk, liquidity, arbitrage, etc. Their primary concern right now is around market manipulation and the ability to surveil the market.
I have one word: GameStop.
There you go. Any market
counter argument to that.
The answer is a bunch of issuers, not just us, Van Eck, others, are doing some really sort of groundbreaking academic work, I think, trying to solve their problems. And I'm hopeful that we will get there. I'm very hopeful that I will be first, but I'm not 100% confident of either of those. But look, the Bitcoin market today is much more advanced than the Bitcoin market was 3 years ago, and way more advanced than it was 6 years ago. So axiomatically, we have to be closer than we have been in the past. That doesn't mean we'll get there, but I'm optimistic. It won't be tomorrow, but we'll get there in the next 24 months. I'm hopeful.
But in the current regime, what is anyone can go on and buy some of these products in the trust structures. How much more improvement will it be to have an ETF versus what currently exists right now?
Oh, massive. I mean, huge. For one, you'll get away with you'll at least severely limit the premiums and discounts that Hector was talking about. That's the lawyer sitting on my shoulder talking about imperfect. And then the other thing is you'll open up huge areas of the market, most likely that currently don't access those funds. So like wirehouses, by and large, probably don't have direct access to GBTC. They may be on non-standard lists. Once you get an ETF, you open up the possibility of that. So I think it will significantly expand the market. Look, all of us just want investors to be able to gain safe, secure, easy access to crypto. that will be, in my opinion, a good thing. And an ETF will be a substantial improvement, in my view, over the OTC traded trusts that exist right now, including Bitwise's own.
I should say,
Absolutely. Good.
I want the SEC to approve one of the products. I think it'd be fantastic. I just think the roadmap, which I agree with Matt, is finally very clear, right? I think after multiple decisions and Bitwise and others did a really good job of finally getting the SEC to put down on paper, here's a roadmap to approval. I think when I survey the markets, they've come along a long way, and it's a great thing, but I still think there's more to be done to meet that roadmap. And I think it's great you see changes at the level of the commission, but I think the staff is pretty wedded, and Matt knows more about this, because I wrote a lot of blogs on this in my spare time, like a few years ago, but I think the staff, from what I understand, is quite wedded to that roadmap. And despite, whether it's Gary Gensler or others coming in, they've drawn that line in the sand, and they will simply tick that box when it comes. And that moves around how much of the volume and tradability is on markets that are subject to some surveillance regime.
But it's not just the SEC. Just to go to Hector, the ECB and the Bank of England itself, has made statements against, negative to Bitcoin. So, Hector, how do you see that in your home market?
Yeah, I mean, probably the one I think is the most insane was the FCA's ruling recently that, I think they said something ridiculous, like they were going to save retail investors 53 million by, cutting the access to ETPs, completely losing sight that, every third email people get in their spam nowadays is some fraudulent Bitcoin scheme, which if you can't have a product, forces you down that road. I think the biggest thing people miss on ETPs and ETFs, though, from a protection perspective, is you can't get access to a product unless you have a trading account with the brokerage. And by definition, that brokerage should be making a decision on whether that instrument is suitable for you or not, right? So there's a natural gatekeeper to giving access to the product. And it's the same argument for active funds as well, that, active funds always worry about who's on the other side of the table. And then actually, an ETF fixes a lot of that, because, you often find, so to me, the FCA's response should have been to make it a complex instrument rather than make it a retail only, a professional only. If they'd have made it a complex instrument aligned with things like short and leveraged ETFs or some synthetic products, whatever, that would have made a lot more sense to me. I still think, I can understand to a certain extent the regulators and the authorities at B being very concerned on the volatility. I think that to me is the biggest killer for the products as it currently stands, where it can move 20% in a day. That I think is where the main concern is for these guys, that, people will get completely wiped out through that sort of scenario. But equally, if you look at the UK market, that is heavily dominated by CFD and spread bets, and people, even when they have to carry on their adverts that 93% of people lose all their money, right, trading this stuff, they still allow it. I mean, it's insane.
Well, that's what we saw in the US, right? We've had short squeezes, and we saw this all of last week in regular stocks.
But in the UK, they make the CFD and spread bet firms put on their adverts like a cigarette warning.
Yeah.
How people lose money, and investors still come to these bloody things and get churned through them. So to me, they use a sledgehammer to crack a nut here, and they could have made a sensible decision, which is that. But look, again, as I say, this is very similar to the gold story. We used to have people, when we did the gold, would even argue it's not even asset class. People shouldn't be allowed to invest in it. They used to say that. It sounds insane now, but that's what people used to say. But this is on the march. This horse has bolted now. They need to find the way to make it work now, because otherwise it's just going to end up in a complete mess, whether it's ECB, the Bank of England, or whoever. I did think once BaFin made its decision, the German government made its decision, I felt everybody else would start to come along, because nobody wants to be first. And I think when they made cryptos official financial instruments in March last year, I felt that was the opening of the door for everybody, really.
Yeah.
Great. Should we start wrapping up?
Remember, though,
I think we should
really regulatory arbitrage, and you could talk about how different countries operate and they block certain products, but ultimately what's going to happen is that everyone's going to come to Switzerland and list their products. I mean, we've done this and we've shown it with Matt's product. We have a Bitwise product in Switzerland. Obviously now all the other issuers here are now listing in Switzerland. Before there will be a Bitcoin ETF going into the US, I guarantee there will be 2 or 3 more issuers coming into the Swiss market. Why? Because the doors are open, and you know, under the actual Swiss law, you know, with the collateral structure that you have for a product, people can actually list their product onto the market. We haven't really discussed much about this, but this is something which I think has got more value, because Hector talks about BaFin and Germany with Bitcoin, but that's only one crypto asset. We've shown we can actually list 10 products with variety of crypto asset, not only just in Switzerland. We've done it in Germany. We've also done it in Austria, and we're gonna do it in 2 or 3 other exchanges in Europe. So before people can do that, what they'll do first is they'll come to Switzerland and issue their product either with us, because we can do a white label, or they'll do it themselves. So we're going to see a lot more people coming into this market in Switzerland before anything else happens around the world.
That's great. Martin, you want to sum up? We're going to start wrapping up. Thank you very much.
I mean, first of all, thank you all very much. I think we had a very interesting insights. I don't want to do a long sum up now at the end. I just would ask you, I mean, based now on your experience, what you have seen in the market the last 12 months, looking into a crystal ball, where do you see the market heading in the next 12 months? What will happen with your products or in general? It's not about now Bitcoin price by itself, but just where do you see the developments? If you feel your clients and if you see what the traction from the past year.
I think you'll see, like we saw Ruffer make a pretty big announcement. I think you'll see that into our products. One of the providers here will, all of us, I think, will start to see more and more established names in Europe coming to us, looking for access, investing, and then ultimately letting their investors know that, and here I'm talking about more traditional fund managers, letting their investors know that they are now taking Bitcoin or other digital currencies seriously as an asset class. And I think, you know, I really think 2021 is going to be the year, and not just the Teslas of the world, but, you know, some of the traditional asset managers, fund houses, the level above, even potentially pension funds, starting to take this asset class seriously, starting to figure out how it fits in their portfolio, whether it's an inflation hedge or insurance type exposure, whether it's simply just reflective or protective against, you know, concerns around monetary policy and debasement, really seriously considering how they're going to fit. And I think that will be something that all 3 of us in Europe, at least offering these products, will experience over the next 12 months.
Who wants to go next?
You're on mute, Laurent.
Laurent, you're muted.
Sorry, I'm not 100% confident that we will see pension funds coming in, you know, this year, because they work on a much more conservative basis. But certainly from private wealth, family offices, and wealth management, where the door and the gateway is definitely Switzerland, we're going to see a lot more institutional demand. We're inundated by demand at the moment, with people wanting us to either list new products or have allocation on a much bigger scale with our existing one. And as I said, we're very humble. We don't have, you know, huge assets like the other players on this panel. And so obviously there's certain restriction, but we know that people are benefiting from the fact that they can't go directly. So they have to go through a listed product. And we're likely to see an explosion this year of institutional investors, maybe not the real conventional one, the tier 1, tier 2, but certainly flooding in the market, buying listed products, certainly in crypto, whether it's single asset class or baskets, or even more innovative that we're about to launch. We've got two very good products that are going to come onto the market, very innovative, and I think that's what people want. And the institutional are showing and bringing the path for it.
Superb.
I'll jump in. I think Townsend and Laurent have talked, and we've talked a lot on this panel about Bitcoin. I'll just add the other thing I'm really excited about not from a product perspective, but just where I think the market is going. I think the sort of people who are wrestling with Bitcoin today are going to start wrestling with ETH and decentralized finance within the next 24 months. I think decentralized finance is the riskiest, most exciting development I've ever seen. And both of those are true, risk and exciting. And there's been essentially no coverage in the mainstream press. So fascinating discussion around Bitcoin. I'm hugely focused on getting a Bitcoin ETF across the line. But my intellectual curiosity and where I think like the Wall Street Journal and the Financial Times are going to migrate their interest to in 2021 is going to be in part to this DeFi market that's just now emerging, which is so fragile and interesting and exciting. So I'm really thinking a lot about that.
And Matt, your index fund actually covers DeFi.
Yeah, two DeFi assets made it into the index fund in the last rebalance, Uniswap and Aave, and that's the first time those classic DeFi assets. It also holds Chainlink, it holds Ethereum, which we could debate, but those are classic direct DeFi apps. They just made it into the top 10, but there's a wall behind them, and honestly, even the sort of crypto savvy traditional finance people I talk to have no idea what's going on in that market. So I'm really excited about it.
Do you think you'll change your balance? Just to like do more of that, or that's to be decided?
We let the market decide. That's the beauty
All
of
right.
market cap weighting. I have personal opinions about every asset in my index, but they never influence what goes in. The market will tell us what's the most important, and the index rebalances and reconstitutes monthly. So it always is invested in those assets. I think market cap weighted indexing is a great strategy for people who don't want to underwrite single assets. And I think it'll become more important in the market. It's well tuned to the advisor and professional investor market who's interested in crypto, but couldn't tell you what Aave does.
Matt, regarding your point, Matt, I also think that DeFi will be the most important topic for the next 1 or 2 years. But what I'm afraid of, or what I hope, is that we don't see as much scam as we have seen 2017 with all the ICOs. Mm-hmm. And when I see who in Germany and Austria is talking about DeFi, it's the same guys that made ICOs in 2017, and this can be really bad for the image of blockchain, and this is where I'm really afraid of. And regarding our project, I would say I hope that in 2 years our share is one of the most boring digital assets that we have tokenized, and there will be a lot of more exciting stuff. And I also hope that in 3 years we don't even need our digital twin anymore, because we can have the real share on the blockchain.
All right, wonderful. Hey, Martin, you're on mute.
Okay, thank you. Oh, so wonderful. Thank you very much for being here. I would really love that, you know, we redo our panel in a few months or in 1 year, and we'll see where we stand. And I think it's a very exciting market, and I mean, it was really great having you here and giving us these insights. I think we learned a lot. Shantanu, thank you very much also for helping so much with this panel. And yes, my dear friends, I hope that we have soon the opportunity to exchange our opinions again. And to our listeners and viewers, thank you for attending. Please keep CVA Crypto Valley Association in your view, and join other events. We are really here to try to educate the market, to bring information from experts, from first sides to you, so that we are all well educated and we can learn about this very exciting space.
Okay, thank you, everybody.
Thank you very much, everyone.
Thank you.
All right, bye-bye.
Thank you very much.
Having me.
Yeah.
Bye.
See you guys.